All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Challenge, we're holding Apple, or I'm holding Apple. Those of you following along, we're holding Apple here, and option price right now is about 580. So we're in the green on it. It's been a slog. It's been interesting because we had the one day where we had four triggers come in: Apple, Microsoft, Facebook, Baba, and they've all pushed on higher. And we've seen each and every one of those stocks trade higher. Not all of them have options trading higher. Alibaba does. Facebook, the options are pretty muted, and Apple and Microsoft also fairly muted there, as we have seen a lot of implied volatility come out. We have seen, some of the time decay effects really kick in here for those, but nothing to adjust, nothing to do there with Apple. Going to continue to hold this here. It is up at the upper Bollinger Band. That's always an area where you could find a little resistance, but we've been seeing consolidation for so long. I would not be surprised to see it blow right on through it. So anyway, that's the challenge. Now there are no new signals here this afternoon. I thought Juniper was going to trigger, and it is triggering everything except for there's one parameter that we've put in the algorithm to limit this type of action right back here. Where you get the big up day and then that big drop the next day, because it's just absolutely option crushing, right? If from a stock standpoint you can weather it, from an option standpoint it is crushing. And sometimes you get the big up day and you get the nice follow through, but the odds are pretty good that this goes higher. But it's made more than a 2 average true range move in order to create the signal, so not a tradable signal there for the challenge with Juniper. I was a little surprised JD didn't trigger. I did expect JD to trigger here, but the consolidation risk on it is rather high, and personally, I think JD has some really nice breakout potential here. It's been consolidating now for 5 months worth of consolidation. Nice little V-shaped recovery, perfect retracement action. It's a matter of time in terms of breakout to the upside, from what the chart dictates. We've seen the 200-day moving average start to turn back up for the first time in a while for JD. And if you look at this chart from a monthly standpoint, since it, is IPO the right word? I'll use the word IPO, but since it's restructure, whatever you want to call it, back here in 2014, we have seen it, have some big up, have some big down, and does look poised for another leg higher here. All right, so that's where the challenge is. Going to run with that here into the close today, and see kind of what the market gives us as we go forward. Now, I was having a conversation with one of you this morning, and brought up some really interesting points about the market and what's going on out there, and so I want to speak a little bit here to it, and it's one where we have a market today that is in a very nice kind of breakout mode, right? But we're human, and as humans, what do we remember? We remember the Trump tweets. We remember the choppiness. We remember the danger that's out there. We remember upside signals, and the next day the market's down big. We remember market down big, and the next day the market's up big. We remember that, hey, U.S. President Trump could tweet at any time. We remember the Fed can create some angst at any moment. All of those are fresh in traders' minds, right? And that is this thing we call the wall of worry, right? This worry element that's out there, and it's pretty high, in terms of how people feel about things in the market right now. And it's very evident as you go through different news sources that you can see the, very high wall of worry that is out there. In fact, if we come into the AAII sentiment index, this is incredible. This is absolutely incredible. The market is what, 1.5%, 2% away from an all-time high, right? And yet the bullishness in the market is 28% with a historical average of 38%. It's not just under average, it is significantly below average. The bearish sentiment is historical average is 30%, and it's almost at 40%. Even the neutrals, that's pretty much kind of where neutrals tend to be. The big shift here, or the big divergence here, is it is incredibly bearish. It is overly bearish in every way, shape, and form, with the market near all-time highs. Contrarians look at this and go, this is fuel for the markets to go much, much higher, right? Not just a little higher, but much higher. And, those looking and going, okay, well, we got the economy dropping. We have earnings revisions starting to come in lower. We have, the trade war uncertainty. We have, the yield curve inversion, right? There are all sorts of reasons that we can think of to be bearish, right? But we have a market that's breaking out, that's near all-time highs, where the majority of people in the market are bearish. So when you look at the news, what do you think the news is going to be? We just go to MarketWatch, right? Think about you're the publisher for MarketWatch, right? You're in charge of MarketWatch, of the content, or the editor, the content that gets put on the front page. And you see that more than 40% or almost 40% of individual investors are bearish. Are you going to post bullish articles or bearish articles? You're going to post bearish articles. Why? Because with bearish articles, you're going to get more clicks. You're going to get more people watching. They're looking for affirmation, not information. And so you're going to have more bearish articles. Now, it is natural to have more bearish articles than bullish articles for, similar reasons, but it is one of those where you're not going to see the news turn and go, well, it's sunshine and roses out there and great, grand, and wonderful, right? And look, none of this limits the risk, right? There's definitely still risk factors out there in the market, right? We can still see the market pull back. It's still going to have a bad day here and there, and all of that. But when we go and we look at the metrics are about as bullish right now as they get. We saw the metrics turn bullish like this. In fact, let me come in here to the market vibe. And let me get, it's not updated for today yet. That should happen probably in the next hour. But today, it's probably going to be around 7. Okay? But the last time we saw a push from negative up to 7, right? It took about a week, week and a half, and it happened mid-January. It didn't happen at the bottom. And then the next time we saw it was about the second week in June. Okay? Now, we saw the market vibe turn bullish well before the market vibe hit 7, right? In fact, the market vibe turned bullish right away on this one here in June. But if we go back to these dates, and we look at these times where the market vibe made this push up to 7, right? Let me come into it. Here we are, second week of January. It's right here. Market's a little bit overcooked. Market, oh man, are we going to have a bad day? Are we going to have some resistance? Are we going to have, all those questions come into play. What's fresh in market participants' mind? Well, this drop. This is really fresh. And then, okay, big bounce. Okay, but then, big bad bear day right here. All this is fresh in market participants' mind. here we had in June, right? Market vibe turned bullish right here. It moved to a 7 right here. What happened? Yeah, the market didn't, it didn't just surge up every day and have big up days every single day, but the path of least resistance over time was higher. And that came in after all this concern about the Fed and what's the Fed going to do. And, then we had the trade war stuff that materialized in May. China stopped purchases of soybeans and didn't go and, fulfill their commitment according to some sources. And, China saying, hey, the U.S. did this, right? We had the escalation. The wall of worry was pretty high. What I'm telling you here is what we are seeing from a metric standpoint today is what we saw right here and what we saw right back here in the early part of January and the early part of June. Look, we saw the market vibe turn bullish last week, right? It turned bullish last week, and yeah, it's been a few choppy days and everything else. But, ultimately it's gone higher. We now see it pushing into a 7. That is a very bullish scenario. And if we break down the various metrics, right, you look at the bullish percent index. I mean, just the move here today is enough to trigger it bullish. So let's just say the bullish percent index hadn't been trickling up this week. Just today's move is enough to turn it bullish. That 6% move here in the bullish percent index. If we come and we look at how sector rotation goes, right? Because sector rotation has been rather bearish. We've seen a very conservative flow. But if we go out over the last week, look at the best sectors out there. Is this bearish? Technology, financials, communications, industrials, energy, consumer discretionary, materials. I mean, the three sectors on the bottom are consumer staples, utilities, and healthcare. These are the ones you want on the bottom if you're bullish. This is a very bullish move in terms of how the sectors have moved as well. We have seen plenty of moves where the sectors have been, okay, you know what, it's being led by real estate or it's being led by staples. But the move over this last week as the market vibe has turned bullish is being led in a very bullish manner from a sectoral standpoint. If we come in and we start to look at performance metrics, right? So we come in and we start to take a look at small caps versus large caps, right? Which is something I think is very important when it comes down to it. And we come in and we compare how small caps have done versus large caps over the last 30 days. This is still a very bearish metric. I mean, large caps are up almost 5%. Small caps, they're only up 1.6% over the last 30 days. Wow. That's a big difference, right? That's a huge differential. Especially when we're seeing the market, push up close to new highs. But if we come down and we cut this in half, right? We cut this down to 14 days, which isn't quite half. We see that differential changing, right? The differential isn't as bearish. What's happening is over the last week, we are seeing the differential start to converge to the point where, yes, large caps are still leading over the last 7 days, but not by any sort of significant differential. Is this overly bullish? No. In fact, this is one of the areas I think you can point out as a warning sign of, hey, you know what? Man, if the rally doesn't hold, this is one of those areas that may have suggested that it wasn't going to hold, right? But it's improving, right? The trajectory is improving. And if we come and we put on emerging markets, the EEM, this is outperforming the S&P over the last 7 days, while over the last month, if we come in and we put this in, you can see that the EEM has now taken leadership of the SPY. So, yes, small caps are lagging. The lag is lessening. But when it comes to things like emerging markets, which have lagged for months now, we're now starting to see them take a leadership role, which is a big change, a big shift out there in the market. So, yes, there are memories, there are fears that traders feel, right? All those, what's going to happen, and, well, are we going to get chopped again? And ultimately, it could, right? Tomorrow we can see U.S. President Trump tweet out, hey, we're not dealing with China anymore because of A, B, and C. Deals off. We don't need China. U.S. companies come home. We can see that happen. And you know what? Tomorrow the market's going to trade all the way down here. We could also get hit by an asteroid. Market won't even open. Right? There are a lot of hypothetical could-have scenarios. But when we look historically and look at the metrics that tend to show, look, the market's going up, we see those turning strongly bullish. Not just lightly bullish, but strongly bullish in an environment where the majority of investors are bearish. And the bearish sentiment in the market is very high. Which you wouldn't think, right? You wouldn't think the bearish sentiment's going to be super high when the market's only a few percentage points from an all-time high. But that's the market we have. And that's a market that we have seen in the past. We saw it back in 2016. We saw it back in 2013. We saw it back in 2010. Markets making new highs. Majority of investors are bearish. Market path of least resistance in those situations has been up. We could talk about, the alternatives and incentives, and we could talk about the fundamentals and the valuations and all of that till we're blue in the face. But the bottom line is the metrics have turned bullish in a really strong manner, not just a minor manner, in a very strong manner. What does that mean? Well, bullish metrics tend to mean higher differentiation, so much more of a stock picker's market. Also tends to mean the volatility comes down, right? You start to see the volatility index itself come down. You also see the magnitude of swings during any given day start to lessen, and that's what I would expect that we will see, right? We're going to have a down day. We're going to see some sell come into the market, sell pressure from time to time come into the market. But it shouldn't be market up 20 points to market down 30 points to market down 10 points and see those 50-point swings. We should be talking about 15-point swings, 20-point swings, rather than the 40, 50, 60-point swings that we have seen. Even overnight, right, after we got the news about the meeting being on, overnight we saw, let me zoom into a one-minute chart. And it's normal on breakouts to have some volatility, right? But we should see it start to temper. But here we have the news, right? We're gonna get both sides. They're going to talk, right? I love it. They're gonna talk, and so we get the big surge up. Well, right here, I mean, that's a 20-point drop right there in a matter of an hour and a half, right? So we still have some of the volatility, in play. But what I'm saying is that the market remains bullish. We should see that volatility temper off and see that volatility start to come down to where we're not talking about 10-point swings in a matter of minutes. We're talking about 10, 15-point swings over the course of a given day. Thanks for hopping on. Have yourselves a fantastic evening. I will talk to you tomorrow. Take care.